Let me tell you something uncomfortable right from the start. I've lived long enough to watch more fortunes disappear than appear. And the older I get, the more obvious one truth becomes. People don't go broke because the world is unfair. They go broke because they insist on running headfirst into the same damn walls their grandparents ran into. And they run faster, too, as if velocity could defeat stupidity. I used to think money was complicated. I thought wealth went to the smartest men, the hardest workers, the ones who knew all the secrets. But then I watched a distant relative of mine, bright fellow, charming, a real talker, blow through his small inheritance in under a year. He didn't gamble it away. He didn't buy a mansion. He simply did what most people do. He believed he was immune to consequences. He bought things he didn't understand, listened to people who knew even less than he did, and borrowed money because the future always looks friendlier when you squint. Last I heard, he was still blaming the economy. That's the human default. Believe me, I've seen this pattern for almost a century. People think they're playing chess, but most of them are just pushing pieces around the board hoping the game ends in their favor. They want brilliance. They crave excitement. They think wealth appears through some heroic leap. The truth is far duller. Wealth grows slowly, quietly, almost invisibly. Meanwhile, stupidity is loud, predictable, and fast. That's why stupidity wins more battles than intelligence ever will. When I was a kid in Omaha, the world outside my window was a daily reminder that money doesn't tolerate carelessness. Men with steady jobs lost everything because they believed yesterday guaranteed tomorrow. That belief, by the way, is the biggest financial hallucination in human history. A single gust of wind, a bad month, a surprise crisis. Suddenly the ladder they spent 20 years climbing turns to dust. And then they look around wondering who lit the match. Most of the time, they lit it themselves. Here's the thing. People always ask me for the secret to getting rich. They ask as if I've been guarding some sacred treasure in a vault. But the real secret is painfully simple. Surviving. Surviving your own impulses, your envy, your arrogance, your illusions. Surviving the temptation to feel clever. Surviving long enough for compounding to get off its lazy ass and start working. And the tragic comedy is that most people don't want survival. They want spectacle. I'll put it bluntly so there's no misunderstanding. The world is full of people reaching for brilliance when they can't even avoid basic errors. If you want to protect your money, you don't need a genius plan. You need to stop lighting your own pockets on fire. And that starts with admitting that the biggest threat to your wealth is the person brushing their teeth in your mirror. So today, I'm not going to flatter you. I'm not here to sell hope or inspiration or any of that sugary nonsense. Today, I'm going to say the things people avoid because they sound too harsh, too simple, too old-fashioned, and because they work. Compounding is the closest thing to magic you'll ever meet in finance, and most people treat it like a toy they can pick up and drop whenever they feel bored. Here's the thing. Compounding isn't a friendly house guest. It's more like a stubborn old tree. It grows slowly at first, almost insultingly slowly, and you spend years staring at the damn thing wondering if it's even alive. Then, right about the moment you stop paying attention, it starts putting down roots so deep that a storm can't shake it. But if you chop that tree every time you panic, don't complain when you're left with firewood instead of a forest. When I was a young lawyer, I saved every dollar I could, which wasn't many, believe me. I'd stuff a bit into some bland little investment, watch it earn barely enough to buy a sandwich, and wonder why I bothered. But here's the paradox. That boring trickle later became a flow, then a stream, then something heavy enough to move mountains. Not because I was smart, because I stayed out of my own way. Most people never experience that transformation. They get impatient long before the tree even sprouts. They dig it up to check the roots, then wonder why nothing grows. The dangerous part is that compounding doesn't shout, it whispers. And people don't listen to whispers, they listen to noise. Markets jump around, Headlines scream. Friends brag about doubling their money overnight. And suddenly the whisper of compounding sounds too quiet, too slow, too old-fashioned. So they interrupt it. They sell too soon. They buy something shiny. They panic at the wrong time. And every interruption is a reset button that costs them years. Let me ask you something. If you were climbing a mountain and someone told you the biggest danger wasn't the cliffs or the weather, but your own feet wandering in the wrong direction, would you believe them? Probably not. Humans don't think the enemy could be themselves. But that's exactly what kills most portfolios. The owner can't sit still. Because sitting still feels like incompetence. Doing nothing feels wrong. Activity feels like progress even when it's sabotage. Trust me, the graveyard of investors is filled with people who couldn't keep their hands off their own money. Here's the cruel irony. The people who end up rich aren't the ones with the highest IQ or the fanciest spreadsheets. They're the ones who resisted the urge to fiddle. They let compounding do its slow, invisible work while their neighbors ran around chasing sparks. I've said it all my life. You win by avoiding the interruptions, not by inventing brilliance. But people don't like that answer. They think wealth comes from drama. It doesn't. It comes from decades of unexciting, almost monotonous patience. And if you think that sounds dull, that's because it is. But it's also the only thing that works. Debt, let me tell you, is a sneaky little parasite. It doesn't drain you all at once. It just takes a quiet bite every night while you're asleep, until one morning you wake up wondering why you can't breathe. People treat debt like a pet they can train. They feed it, comfort it, make excuses for it, and then act surprised when it grows into a beast that chews through the front door. If you think I'm exaggerating, you haven't lived through a real crisis yet. Debt behaves beautifully, in good times, almost charming, but the moment the tide turns, it becomes a predator. I once knew a small business owner, not famous, not brilliant, just a hard-working man who ran a repair shop. He took out a loan because everyone else was expanding. He thought he was being ambitious. 2 years later, a recession hit. His revenue dropped, and suddenly the bank wasn't treating him like a partner anymore. They treated him like a burden they wanted off their books. He didn't fail because he was lazy. He failed because he had handed control of his future to a lender who didn't care whether he survived. That's how debt works. You give up the steering wheel long before you notice the car leaving the road. Drama is just as destructive, but in a different costume. Drama eats time the way debt eats money. And time, in case you've forgotten, is the only fuel compounding needs. I've seen investors who were perfectly capable of getting wealthy, smart, disciplined, sober, until they tangled themselves in messy partnerships or chaotic relationships. Suddenly, the game wasn't about investing anymore. It was about putting out fires. The brain only has so much bandwidth, and if you waste it on emotional circus acts, you won't have anything left for rational decisions. Wealth doesn't survive in a storm of noise. Because drama shortens your attention span. It reduces your tolerance for boredom. And once you lose your boredom tolerance, you start making impulsive choices. You buy things you don't need. You chase investments you barely understand. You confuse motion with progress. And that's how disaster starts, not with a catastrophe, but with a distraction. The funniest part, if you can call it funny, is that people choose debt and drama willingly. Nobody forces them. They walk into the cage themselves. Why? Because both give the illusion of excitement. Debt lets you feel richer than you are. Drama lets you feel more important than you are. And humans love illusions more than they love arithmetic. I've said for decades that avoiding stupidity beats chasing brilliance. Well, debt and drama are the purest forms of self-inflicted stupidity. You don't need a PhD to avoid them. You just need enough humility to admit you're not strong enough to dance with disaster. Cut those two poisons out early, and you'll be shocked how much calmer your financial life becomes. Avoid them long enough, and you'll start to understand why the richest people I know aren't the flashiest. They're the quiet ones, the ones without the beast at their door or the circus in their living room. And believe me, silence is far more profitable than excitement. Envy is a quiet little poison. It doesn't storm into your house like debt or drama. It slips under the door frame, sits in your kitchen, and starts whispering nonsense into your ear. And before you know it, you're not living your own life anymore. You're living some distorted competition you never agreed to play. I've seen envy turn perfectly sane people into reckless fools faster than any market crash ever could. Picture yourself driving down a long, empty road. Suddenly a gust of wind hits the side of your car. It's nothing, just air, but it nudges you off course. That's envy, a momentary gust. But if you don't correct it, you end up in a ditch, wondering how the accident happened. It wasn't the road, it wasn't the car, it was your hands letting the wheel drift toward someone else's lane. I remember a man I met decades ago, smart, competent, successful enough for a comfortable life. But his college roommate struck it big during a bull market, and that single comparison ruined him. He wasn't investing anymore, he was chasing someone else's shadow. He bought the same tech stocks, the same speculative nonsense, thinking he could catch up. The roommate eventually lost most of his fortune, but by then the man had already blown through his savings trying to match a scoreboard that didn't matter in the first place. That's the tragedy of envy. You can lose even when the person you envy ends up losing too. Taiso, the envy shuts down your judgment. It replaces logic with urgency. When you're envious, you're not asking, is this rational? You're asking, how quickly can I close the gap? And that's the wrong question. Wealth isn't a race. It's a marathon where most runners collapse by mile 20 simply because they kept glancing sideways instead of forward. Here's the paradox. The more you look around, the less you look ahead. And if you're not looking ahead, you're not compounding. You're reacting. You're drifting. The markets reward patience, not panic. And envy creates panic in slow motion. It turns your neighbor's new car into a financial emergency. It turns someone else's lucky break into a crisis of identity. Suddenly, your perfectly good plan feels inadequate simply because someone else got lucky on Tuesday. And let me add one bit of dry humor. I've seen rich men sulk on their yachts because the guy next to them had a slightly longer yacht. Imagine being that wealthy and that miserable. That's not luxury, that's slavery with a better view. If you want to protect your money, stop feeding envy. It never brings joy, never brings clarity, never brings wealth, but it brings plenty of trouble. The cure is simple. Keep your eyes on your own game. Refuse to compare. Remind yourself that the person getting rich faster today might be the one begging for a bailout tomorrow. Survival wins, envy doesn't. And the sooner you understand that, the sooner you stop wandering off your own lane and crashing into someone else's stupidity. Overconfidence is a funny thing. It doesn't arrive wearing a warning label. It shows up looking like clarity. It feels like certainty. It whispers, "You've got this," right before it pushes you off a cliff. In all my years, I've noticed that people rarely lose money because they're stupid. They lose money because they think they're smart. And that little gap between who they are and who they believe they are, that's where disaster lives. Think of overconfidence like a foggy pair of glasses. The more you polish them, the more smudged they become. You keep wiping harder, convinced you're improving your view, when in reality you're just making it impossible to see the edges of the cliff you're walking toward. That's how it works in investing. The people most certain they can't miss are always the ones who fall the furthest. I once met an entrepreneur, sharp guy, quick mind, the type who'd tell you he saw opportunities others couldn't. He had one big win early in his career, just one. And that was enough to convince him he was bulletproof. Instead of sticking to what he knew, he started throwing money into oil, crypto, overseas real estate, none of which he understood. When it all went wrong, he blamed the market, the economy, even the weather. He blamed everything except his own delusion. That's what overconfidence does. It blinds you twice, first to risk, then to responsibility. Taizo, the certainty is addictive. Once you feel it, you start craving more. You stop checking your assumptions. You stop questioning your decisions. You start believing you have some special insight the rest of humanity somehow missed. And the more confident you feel, the less prepared you become for the moment reality decides to teach you humility. Here's the paradox. The people who survive aren't the boldest. They're the ones who admit they're clueless most of the time. Warren and I built our entire partnership on 3 words: I don't know. Those words saved us more money than any brilliant idea ever did. Knowing your limits is the rarest form of competence. Ignoring your limits is the commonest form of bankruptcy. Let me pose a simple question. If you can't predict the weather next Tuesday, why on earth do you think you can predict interest rates, commodity cycles, and global trends all at once? You can't. Nobody can. But overconfidence convinces you otherwise. It turns uncertainty into arrogance and arrogance into losses. Overconfidence is the silent killer of wealth. It doesn't make noise like debt. It doesn't sting like envy. It just walks beside you quietly, nodding, encouraging, applauding every bad decision you make until you run out of rope. If you want to avoid losing money, don't aim to be right all the time. Aim to avoid being catastrophically wrong. And the easiest way to do that is painfully simple. Downgrade your confidence. Upgrade your humility. The market doesn't reward brilliance nearly as much as it rewards survival. And survival begins the moment you stop pretending you're invincible. Most people lose money because they think like employees, not owners. An employee mindset looks at the world 1 quarter at a time, always asking, how do I look right now? An owner mindset asks, will this still make sense in 20 years? That tiny difference in perspective is the difference between surviving and sinking. Let me give you an image. Thinking like an employee is like checking the weather every 10 minutes and changing your clothes each time the wind shifts. Thinking like an owner is like understanding the whole climate. One is reactive, panicked, constantly adjusting. The other is prepared, steady, and almost boring. And here's the kicker, boring wins. I once met a man who worked his way up the corporate ladder, rung by rung, until he finally got the corner office he'd spent his life dreaming about. The problem was, he'd spent so many years pleasing bosses, dodging blame, and chasing bonuses that he never built anything of his own. When his company restructured, his entire identity evaporated. No assets, no ownership, no compounding, just decades of polished resumes and nothing to show for them. Taisao, the careerism protects your ego, not your future. Here's the paradox. The safer the job feels, the more dangerous it actually is. Jobs disappear. Corporate promises evaporate. Incentives shift. And if you spend your life optimizing for applause instead of results, you'll wake up one day realizing you've been climbing someone else's ladder and it wasn't even leaning against the right wall. Owners think differently. Owners care about durability, not drama. They don't panic when things look bad for a quarter because they understand that compounding doesn't operate on a quarterly schedule. Owners sacrifice today for tomorrow. Careerists sacrifice tomorrow for today. And it shows up in the numbers every time. Let me ask you something. When you buy a business, whether it's 1 share or 100%, do you think about it the way an owner would? Or are you checking the stock price like an employee checking performance reviews? Because if you don't think like an owner, you're not investing. You're just renting your future. The funniest part of all this is how many executives act like kings while running companies they don't even truly own. They strut around with big titles and bigger egos, all while making decisions that would embarrass any real owner. I've seen people approve acquisitions just to look busy. I've seen them cut investment in the foundation to impress Wall Street for a single quarter. That's not stewardship. That's theater. If you want to avoid losing money, start asking the one question that never fails. Would an owner do this? Owners skip the noise. Owners focus on what lasts. Owners think in decades, not days. And if you adopt that mindset, really adopt it, you'll immediately separate yourself from the crowd of people sprinting towards short-term applause. The world is full of careerists chasing approval. The world rewards owners who chase resilience. Be the second one. It's far less glamorous and far more profitable. If you want the real secret to keeping your money, here it is. Avoiding stupidity is a full-time occupation. People think wealth is built by brilliant insights, heroic bets, and dazzling intelligence. Nonsense. Wealth is preserved by not stepping on the same landmines everyone else steps on. And believe me, the world is full of landmines. Some are obvious, some are subtle, and the worst ones are the ones you plant yourself. Avoiding stupidity is a bit like walking through a forest covered with old military mines. If you move slowly, pay attention, and respect the terrain, you'll make it out fine. But if you sprint through the trees because you're feeling confident today, well, don't act surprised when something explodes. Most fortunes aren't destroyed by bad luck, they're destroyed by speed, ego, and carelessness. I once knew a fellow decent man, hardworking, who had built up a tidy little nest egg. Nothing spectacular, but enough to give him peace. Then one day, a friend convinced him to put nearly all of it into some can't-miss investment overseas. You can guess the ending. Within a year, he had lost almost everything. Not because he was foolish at his core, but because he let one moment of excitement override a lifetime of discipline. That's the terrifying part about stupidity. It only needs one opening. Tai Sao, the stupidity compounds faster than intelligence. One bad decision can erase a decade of good ones. One moment of arrogance can undo years of patience. One slip can interrupt compounding so violently that the math never recovers. And yet, people still chase shortcuts, still insist on making up for lost time, still believe they can outsmart the very traps that swallowed thousands before them. Here's the paradox. The smarter you think you are, the more stupid mistakes you're likely to make. When you believe you're above the rules, you stop noticing the cliffs. When you think you're immune to error, you start walking blindfolded. The market doesn't care about your confidence, it cares about your vulnerabilities. And it finds them, every time. Let me ask you this. If avoiding stupidity is the real edge, why doesn't everyone do it? Because avoiding stupidity feels like doing nothing. It feels passive. It feels small. But that's the whole point. Survival doesn't look heroic. It looks quiet. It looks slow. It looks boring. And most people can't tolerate boredom long enough to benefit from it. I've lived nearly a century, and the people who ended up wealthy were rarely the cleverest. They were simply the ones who didn't blow up. They didn't take the flashy risks. They didn't confuse noise for opportunities. They didn't sabotage themselves halfway through the race. Avoid stupidity long enough, and compounding will do the heavy lifting. Fail to avoid stupidity even once, and compounding won't save you. That's the brutal arithmetic of life. People love to talk about brilliance as if it's some financial superpower. Let me tell you a secret after almost a century on this earth. Brilliance fades, luck wobbles, confidence cracks, but longevity endures. Staying in the game, simply not dying financially, is the most underestimated skill in the entire investing world. And yet, it's the one almost nobody respects until it's too late. I've always thought of building wealth like sailing across an ocean. The goal isn't to show off, or to catch the strongest wind, or to prove you can balance on the edge of the boat with one leg. The goal is to reach the shore alive. But people treat investing like a stunt show. They chase storms for fun. They lean over the rails to feel the rush. Then they act shocked when the ocean slaps them in the face. You don't get paid for acrobatics out there. You get paid for staying afloat. I once watched a young investor smart as a whip stack up gains so fast he thought he'd cracked the code. But he didn't understand the game was 30 years long, not 30 months. Sure enough, After one bad year, he panicked, doubled down on risks he barely understood, and torched the very foundation he'd built. A decade of potential vanished because he didn't have the temperament to endure a rough patch. Tai Sao, the brilliance gives you speed, but longevity gives you survival, and survival wins. Here's the paradox few people appreciate. You don't need to be extraordinary for 50 years. You just need to avoid being catastrophic for one. One financial disaster, one margin call, one stupid bet, one ego-driven decision can erase an entire lifetime of discipline. That's the cruel math of wealth. It rises slowly and falls suddenly, like a building supported by one brittle beam. So let me ask you something. Are you building your life around the assumption that every year will be good? Or are you preparing for the years that will punch you in the mouth? Because those years are guaranteed. They don't send invitations. They show up like uninvited guests, eat all your food, and leave you wondering what happened to your plans. Longevity requires humility, boring, unfashionable, consistent humility. It requires the courage to say, I don't know what happens next, and I don't need to. It requires accepting that missing a great opportunity is survivable, but chasing the wrong one might not be. Wealth builds quietly, silently, almost in secret, but ruin arrives with fireworks. If you want to avoid losing money, aim to last, not to dazzle, not to impress, not to sprint, just to last. Longevity lets compounding unfold its magic. Longevity lets time do the heavy lifting. Longevity turns a cautious life into an abundant one. The world worships brilliance, but brilliance is fragile. Longevity is undefeated. And if you can stay in the game long enough, you'll eventually understand the simplest truth of all. You don't need to be extraordinary to win. You just need to avoid the mistakes that take you out of the game entirely. If I had to compress everything I've learned about money into one plain sentence, it would be this. Wealth is what happens when you stop getting in your own way. Not when you get smarter, not when you get luckier, but when you finally quit sabotaging yourself long enough for compounding to recognize your patience. People think the big wins make you rich. No. It's the absence of big losses that saves you. When you strip this whole game down, the path is remarkably simple. Spend less than you earn and let the gap breathe instead of strangling it with impulse. Stay away from debt unless you enjoy handing your future to strangers. Keep your circle clean, no drama, no chaos, no people who treat your time and money like cheap toys. Only buy what you understand and ignore the rest with confidence. And above all, give compounding the one thing it demands, uninterrupted time. These aren't rules to memorize, they're habits to live. If you follow them loosely but consistently, the world becomes a much friendlier place. But here's the punchline. You don't have to be brilliant to avoid losing money. You just have to stop doing the things you already know are dumb. The universe doesn't reward unnecessary risk or flashy decisions. It rewards the quiet stubbornness of people who stay in the game while everyone else burns out from envy, arrogance, or panic. Longevity isn't glamorous, but it's undefeated. So I'll leave you with a philosophy that carried me through wars, depressions, bubbles, and busts. I never set out to be rich. I simply tried not to go broke. I tightened every bolt in the system until the margin for stupidity was small enough for even a flawed man like me to survive. And when you overshoot in the direction of prudence, life has a funny way of compounding the difference. Forget brilliance, forget shortcuts, forget the circus. Just don't lose. Because if you can manage that, everything else, slowly, quietly, inevitably takes care of itself.